Let's bring in our next guest analyst. That would be Mr. Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, what say you? What's going on? What are these markets telling you?
Oh, well, we're just chopping around. We're certainly looking quite a bit better than yesterday for corn and beans especially. You know, yesterday at the end of the day, we were kind of disappointed in corn's performance relative to wheat, which had continued to make new highs, and we're seeing new highs again for wheat 5 straight days and about 70 cents. So nice to see that in wheat. I was hoping we'd get a little bit more follow-through and spill over into the corn market, but we're just not quite getting there. But I think it still looks constructive. We got some good export data this morning, up 74% from the 4-week average. So that's encouraging. The upper end of resistance for that July corn contract, 454.5. That's this week's high. 460 is the prospective plantings report high. So there's a big barrier up here where I think if we can chew through and close out above 460, I wouldn't be surprised to see that spark a kind of a just because rally on the back of short covering from funds.
All right, so what are you telling your producers? Call up and ask you, they say, hey, what should I do, Oliver? What do you tell them? I know everyone's a little bit different. I get that, but what's your overarching feeling here?
Yeah, everyone's a little different. Some people were really proactive in hedging last year and earlier this year, and some that kind of, kicked the can down the road. For guys that have been more proactive and put themselves into a good spot here going into the second quarter, I'm saying let's see if we can't get a little bit more upside momentum. But mentioning those levels, that 455, 460, if we fail out to get out above there here in the next couple of weeks, I'm going to certainly start telling guys to be a little bit more proactive. But I'm kind of holding out hope that we can get a little bit more of a push. And commodities as a whole, I think, are shaping up to look quite firm. The grains obviously have their own fundamental hurdles to get out above. But if we start to see, some of the stagflation talk start to pick up steam, I wouldn't be surprised to see money kind of search for new homes. I
agree. All right, stay right there. Good stuff. We're going to come back and talk more with livestock with Oliver Slope. He's with Blue Line Futures in Chicago. We'll be right back after this. Ooh. All right, we got 60 seconds for you, Oliver. What do you think about these livestock prices?
Oh, boy. Well, it's been a roller coaster in the live cattle and feeder cattle markets in today's trade. We're lower, a little higher, and then lower, now back higher again. I think just kind of shaking out some weak hands again. I think you and I talked about it on Monday. Really wouldn't be surprised to see this market maybe settle into a little bit more of a trading range, which I think should probably present some good opportunities on both sides of the market, more on the spec side than anything. Looking at the lean hogs, the uptrend is still intact despite today's sell-off. Trendline support from those January lows comes in near 103, 103.5. That's going to be pivotal to hold. I think the thing that concerns me about the lean hog market is seasonally this is kind of a neutral to bearish time of year. And on top of that, you've got funds net long 87,000 futures and options contracts. That's one of their largest positions since 2013. So one could argue they're overextended. If we do get a shift in fundamentals and a technical breakdown, things could escalate quickly.
When guys like you say 2013, you make it sound like such a long time ago, Oliver, and maybe it is to you, but I think my T-shirt